Hello and welcome to AI Market News by LM. Wall Street just got rocked by a massive tech sell-off, and it sent some serious shockwaves through the market. So what on earth happened? Well, all eyes are on one prime suspect: artificial intelligence. Let's dig in and see if AI is really the killer.
Okay, so let's set the scene. It's February 23rd, and all of a sudden, a sharp, sudden drop hits the market, catching pretty much everyone off guard. A real nasty mix of anxiety and uncertainty just took over, and it completely wiped out a lot of the recent gains.
And wow, these numbers really tell the story, don't they? The Dow, which tracks 30 of the biggest companies in the US, absolutely plunged, down over 820 points. At the same time, the S&P 500 and the tech-heavy NASDAQ were also deep in the red. This wasn't just some minor dip. This was a big, broad sell-off that had everyone asking, why?
Well, that brings us to suspect number one, the great AI disruption scare. Believe it or not, the trigger for a lot of this chaos seems to have been a single research report from a firm called Citrini Research. It basically painted this scary picture of how AI could just completely upend entire industries. The reaction from market veterans was pretty telling. As Michael O'Rourke at Jones Trading put it, the market was now literally falling for fiction. Think about that. This huge sell-off was based on a hypothetical scenario, a what-if, not something that was actually happening right now. And the fear just spread like wildfire. We're talking delivery giants like DoorDash and Uber, the big payment processors like Amex, MasterCard, and Visa, and even finance heavyweights like Blackstone. But the biggest loser of the day, by far, was an old-school tech titan. IBM got absolutely hammered, dropping a staggering 13%. That's its biggest one-day loss since the dot-com bust back in 2000. So why the panic? Well, an AI startup called Anthropic announced a new tool, Claude Code, that can modernize old COBOL code almost instantly. That's a service that IBM needs armies of expensive consultants to do. This new AI tool looked like a direct threat to one of their core businesses. But wait, the AI scare wasn't the only thing spooking the market. While everyone was grappling with this hypothetical threat, a very real one was brewing in Washington. And this brings us to suspect number two, a brand new tariff storm.
The week was just total chaos on the trade policy front. First, the Supreme Court strikes down the old tariffs. Then, in response, President Trump announces a new sweeping 10% global tariff. And just as the market was trying to figure that out, the White House hinted it could jump to 15%. This back and forth created a huge wave of uncertainty for investors. But here is where the story takes a major twist. While US markets were in a full-blown panic, the reaction over in Asia was completely different. And this kind of complicates the simple story that AI was the only thing causing the trouble. I mean, just look at this divergence. It is night and day. We had the S&P 500 down over 1%, but the very next day, the Asia-Pacific IT Index actually rose. And even crazier, the main stock indexes in Taiwan and South Korea shot up to new record highs. So what gives?
It turns out, Asian markets saw an opportunity where the US saw a threat. And the reason is actually pretty simple. Markets like Taiwan and South Korea are jam-packed with the semiconductor giants that build the actual hardware, the chips that power this whole AI revolution. So for them, more AI disruption just means more demand for their products. So what's our verdict here? Well, it seems pretty clear that this market shock wasn't from a single killer. It was more like a powerful 1-2 punch. First, anxiety over AI's power to disrupt everything, and second, the very real uncertainty of a new tariff war. Okay, so with that sorted, let's look at what's coming up next. A great tool for us to keep an eye on is the Fear and Greed Index. It basically pulls together 7 different indicators to give us a score on whether fear or greed is the main emotion driving the market. It's a really helpful way to get a quick read on the overall mood, especially in volatile times like these. Now, looking ahead, the economic calendar from investing.com shows we've got some key events coming up. On February 24th, we're getting the Consumer Confidence Report. That one's highly important. We'll also be hearing from several Fed officials, and we'll see the latest GDP forecast from the Atlanta Fed. All of these are going to be critical clues for where the market might go next. And all of this really leaves us with one final crucial question to chew on. As artificial intelligence gets smarter and smarter, and global trade gets more and more uncertain, is this kind of gut-wrenching volatility simply the new normal for our markets? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech.
This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.